Back to market on close. Let's look at the options flows. Mr. Kevin Green with the technical look for the last 26 minutes here. KG, we're kind of blasting off here today.
Yeah, we had a nice little, reaction or melt up to the upside here. I think Powell's comments were nothing that said that he would not cut rates here in December, and we started seeing a decent little reaction to the upside. I mean, we brought it up earlier this morning. We were seeing some activity at around the 60.75 to 60.80 level, and that's exactly where we kind of gravitated to. Now, going into the close, how much can we go up from here? I'm not seeing a lot of activity in the 60.90 calls, but that's something that could be possible if we do have a nice market on close number that comes in. Maybe that creates a little bit more of a melt up to the upside here. But I would still say maybe probably looking at more of that 60.75, 60.80 pen risk type of area that's taking place. But overall, it's a nice little market, even though once again, the breadth is not really expanding. It's really concentrated in the tech names. But as long as price is advancing, I think this is actually a really, really decent sign. And even looking at the 60.50 level, we're not able to actually come back and retest that, but we did hit 60.60 around there and then bounced right back off. So we have buyers kind of stepping in. But, Oliver, really good going into the close. I would say I'm a little bit cautious, though, a little bit concerned when you're like looking at some of the internal metrics when it comes to volatility, that we might be near a potential pullback. And that, not saying an aggressive one, but maybe a 1 day or 2 day pullback or consolidation before we try to retest and move higher here.
All right, so we are establishing, it seems, though, a good bit of distance between us and the 60.50 that had been resistance. So, basically a breakout day to some extent, right?
Yeah, definitely. And you take former resistance and you turn it into support, and that's really what that chart is highlighting here. And we'll see if we have any more moving up and moving out of calls to the upside. I'm looking at the options that are expiring tomorrow as well as Friday, Oliver, and I'm not seeing anything that really signifies that we have an aggressive rolling up beyond that 6,100 level. So that's one thing to just kind of keep in mind. But things can change overnight because SPX options trade 24 hours a day now. But right now, I don't see anything that really signifies that. But you're right. I mean, we have been able to kind of break out through these levels. We had a compression phase. We saw a little bit of a pullback, consolidation, and now we're trying to push higher here.
Yeah. All right. So then the end of year, assuming things go smoothly, we don't have that many data points left. Assuming Friday kind of hits that sweet spot for jobs again, could we be getting a little seasonal melt up if the dealer positioning has to keep shifting higher?
Yeah, that could be the case. And actually, you can also see a scenario where, the large cap or mega cap names could, let's say, maybe stall out or maybe not move as aggressively, but you also get the broader participation with some of these other defensive stocks starting to try to catch up here a little bit. You have the semiconductor trade, as we kind of talked about in the future show this morning, that's doing phenomenal today. But you also have that catch-up trade where the semiconductor, if you're looking at the SOX index, it actually is still pretty much very close to its 200-day moving average. So there could be a catch-up trade that takes place there, and then also looking at industrial. So we still have the environment of a potential melt-up for the remainder of the year here. Volume is going to be fairly low, but I would just, once again, I get a little bit cautious when we kind of get to these levels, Oliver. I mean, we have a day, and we call these out every once in a while. We have a VIX up, stocks up type of environment right now. Now, it's not an aggressive move for the VIX to move to the upside here, but it's something to kind of keep on the radar. And usually when you kind of see that 80% of the time, they have a negative correlation, meaning that the S&P 500 will move up, VIX will move down. Today, we actually had a pretty positive correlation, actually the whole day, as soon as we opened up. And when you kind of look under the hood, you would think, okay, well, maybe this is call side skew, meaning that there's a lot of individuals buying into call activity, call side positions, and that's kind of creating the skew, this push up for the VIX. That's not really the case. You're still seeing about a 1.2, 1.3 to 1 ratio, put to call ratio for today. So that's just something to just be mindful of. That's kind of a typing, a near-term pattern that we could see, once again, a consolidation or maybe a pullback, maybe a little bit of a reset. When you're looking at the technicals, also going into that wedge pattern, that also kind of aligns with that. And then we also have, looking at the VVIX relationship too, kind of signals a lot of complacency, and whenever volatility is cheap, that's usually when you probably should buy vol.
Yeah, vol really slipping down here. With the VIX 13.5 does seem like that does speak volumes for the environment we're in. All right, good stuff. Thanks, Kevin Green.